Hello investors and future investors, welcome back to the channel. In today's video, I will introduce you to a strategy that will allow you to make consistent revenue with little risk and just a small investment, which makes this strategy perfect for traders with small accounts. In today's world of high inflation and recession and everything looking daunting, there's still a chance. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies, dividends, and other investments that can give you consistent revenue in order for you to grow your small account. We can all make weekly revenue if we want to. So I'll definitely show you what I'm doing on my end in order to generate revenue. Now, all I ask in return for this free content is an early thumbs up by you hitting the like button, and consider subscribing for more ways to increase your investments. Welcome to Investment Gains. Let's jump right into it. Hello future investors and traders, welcome back to the channel. Today's video will showcase a 4-leg option strategy that when used correctly and consistently will be able to grow your small account. Now today's strategy is perfect for capitalizing on neutral or sideways market with limited risk, which means you will know exactly what you're risking even before you enter the trade. Now, like most of my strategies on this channel, you will be able to receive a credit or some income once you enter the trade. And this option strategy is no other than the Iron Condor. So for today's video, we're going to be using the Spider ETF, ticker SPY. Now I have done countless Iron Condors using SPY ETF because it's stable ETF that can be traded 24 hours a day. And yes, you heard me correctly, it can be traded 24 hours. So I will show you the components of this strategy, when it should be used, and how to keep winning with this strategy. And lastly, I will show you that this is not a complicated strategy and how fast it can be done so you can continue with your daily life. So let's go. Now the Iron Condor consists of two smaller strategies, namely the call credit spread and the put credit spread. And when these two come together, that's what's known as the Iron Condor. So let's go ahead to trade SPY option. Okay, so we're going to start off by me showing you the call credit spread, and then we're going to move on to the bottom part of this Iron Condor, which is going to be the put credit spread. Then we're going to put them all together. So in order for you to do call credit spread, let's just make sure it says sell and call, and we're going to go ahead and choose our strike date of July 17th. Now, I'm going to look for a chance of profitability of 80% or higher. That is just my preference based on my risk tolerance. Feel free to do your own due diligence and decide what your risk tolerance is. So I'm going to go with the strike price of $452, which gives me an almost 80% chance of profitability. Now I'm going to go over to buy and call, leaving the same expiration date, and I'm going to go ahead and choose a strike price right above our justly made sell call, which is going to give us the $453 price. We're going to go ahead, we're going to select that one. Now, as you can see up here, this is a call credit spread, and this represents the top half of our Iron Condor. And as you can see here, your total credit, if you only to do the credit spread, would give you 0.21 or $21. Now we're going to go into the bottom part of our Iron Condor, which is going to be the put credit spread. Now, in order for it to do this, we have to make sure it says sell and put, and we're going to keep the same strike date, which is July 17th. Now, in this instance, we're going to choose our strike price below the current share price. And once again, we're looking for a chance of profitability of around 80% or higher. So I'm going to go with the $447 call, which is almost an 80% chance of profitability. I'm perfectly fine with that. So I'm going to go ahead and select that one. Now we're going to go over to buy and put once again, but this time we're going to choose the strike price right below our justly made sell put, which is going to give us the $446 strike price. Let's go ahead and we're going to select that one as well. As you can see here, it says put credit spread, and once again, if you were to do only a put credit spread, you will be receiving a credit into your buying power of $20. It shows 0.1 here, but each option contract is multiplied by 100 shares. Now that you know the call credit spread and you know the put credit spread, now we're going to go ahead, we're going to put the two together to show you the Iron Condor. So let's go ahead once again, and we're going to start from our sell call with an 80% chance. Let's go with the 452. We're going to go over to buy and call, and we're going to choose the strike price right above, which was the 453. Now we're going to go over to the bottom part of the Iron Condor, and we're going to select sell and put, once again keeping the same strike date, and we're going to look for the price below our current share price with an 80% chance, and that's going to give us the $447. We're going to go ahead, we're going to select that one. And now we're going to go to buy and put, and we're going to choose the strike price right below our justly made sell put, which is going to give us the $446. Let's go ahead and click that as well. And as you can see up here, Iron Condor. Now, this may look a bit complicated, but it really isn't. I'm going to show you the details in just a second. Now, once you do this Iron Condor, one of the things I absolutely love about this strategy and most of the strategies on this channel, once you do these strategies, right away you receive a credit into your buying power, which is yours to keep no matter how the trade goes. In this case, you will be receiving $41, which is 0.41 multiplied by 100 shares. And that's, in my books, that's awesome. Now we're going to go ahead to continue. We're going to choose the amount of contract, which we're going to go with just one for now. And we're going to hit review. Now, although we're going to be receiving $43 right away into our buying power, this option strategy requires us to leave a collateral. In this case, the collateral is going to be $100. Now, you may be asking, how does Robinhood come up with $100? The $100 is based on your spread, and the spread is the difference between your two strike prices. So in this case, it's going to be 447 minus 446, which is going to give you $1 difference. You multiply the $1 by 100 shares, and that should give you your collateral of $100. Now, if you're impatient and you don't want to make $43 on one trade, you want to make even way more revenue, I could show you what to do. Let's go ahead, go back. And what you're going to do now, you're going to increase the amount of contracts right here. Let's go with 5. And right away, you see your minimum credit automatically jumped up to $215. However, although your minimum credit went up to $215, your collateral is also going to go up, and that's going to be $500. Now, this is derived from $100 multiplied by which you now have 5 contracts. Now let's go back into our original one, which is going to be 1 contract, and we're going to go through how do you win with this trade and how do you not to win with the trade. So the first part you win with this trade is by receiving a credit into your buying power, which you get to keep. That's number 1. That's a big winner for me. The second way you win with this trade, at expiration of July 7th, all you need is for the share price of SPY to remain between your 452 call and your 446 call. Once that happens, then you get to keep your minimum credit and you get your collateral released back to you, and then you get to do this trade again and again. Rinse, repeat, just keep it going. Now let me show you what this looks like on the actual graph. So we're already in the put section, so we're gonna stay here. So come expiration date of July 17th, you want SPY to be trading at 447 or above. That's the put aspect. So once it's trading above 447, then you're good. Now let's go over to the other part of the Iron Condor, which is the top part. Now, come July 17th, you want SPY to be trading below 452. So above 446 and below 452. Once that happens, then it's a win. Now, when should you be using Iron Condor? You should only be using Iron Condor if you think the market is going to be moving sideways or there's little movement either to the upside or to the downside of a trade. Then the Iron Condor will work out perfect. Now, the other reason why you should be using Iron Condor is if you have a small account. I mean, if you have an account with $10,000, there's lots of other strategies you could use. The main purpose of using an Iron Condor is for you to grow your account while doing multiple contracts. And now I'm going to show you how simple the strategy is to put into play. All you need, once again, is practice, practice, practice. So we're going to go to trade Apple options. We're going to go to sell and call. We're going to choose our expiration date. Let's go with July 21st. Now we're going to go ahead and choose our strike price. Keep in mind, I'm looking for 80% chance or higher. We're going to go ahead, we're going to click that. We're going to jump over to buy and call. We're going to choose the strike price right above. Now we're going to go over to sell and put, and we're going to look for the strike price below the current share price once again with an 80% chance or higher of profitability. I'm going to choose the 78%, which is fine enough for me. And now we're going to go to buy and put and choose a strike price right below that, which is 185. And there you have it. Short Iron Condor, and that I did in less than 30 seconds. The only way to learn with options is by practicing. So you always remember one thing: practice, practice, practice. Now, we have lots of investment strategies on this channel, so if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert whenever I post a video. But most importantly, please share this video with someone you think that can benefit from its content. Let's help as many as we can. Remember, a salary will give you a living, but your investment gains will give you a lifestyle.